All right, good afternoon, traders. Thanks for joining and taking your time to check out this week's live trading webinar. Right off the bat, as always, quick test of audio and visual. If you can hear my voice and see this opening slide, go ahead and just type a Y in the chat box for me. All right, thank you, Omar. Thank you, Gary, Hines, Alan. All right, thanks, guys. I appreciate that. And just be sure to use that chat to ask any questions throughout the webinar, and we will get to those after the presentation. All right, so most of you should be familiar with my voice by now, but for any first-time viewers or LizardTrader members, my name's Ty. I'm coming at you guys from Charlotte, North Carolina, and I handle the business development here at Shark Indicators. I've been doing this for several years now, and we as a company have been involved in the NinjaTrader ecosystem since 2011. So on that note, before I pass it off, let's take a quick look at the risk disclosure. Just take a minute and look this over. Futures, foreign currency, and options trading contains substantial risk and is not for every investor. And just to answer the question that I know is coming, this webinar is being recorded. So just look for an email from Ty at Shark Indicators, and I will get it out to you guys by tomorrow morning at the latest. Okay, so a lot of people here should already be familiar with Kris Lassen and LizardTrader. And for those of you who are not, I'll have Kris introduce himself here shortly and get right into today's focus, which is dealing with the noise. So at this point, Kris, I'm going to promote you to presenter so you can introduce yourself to some of the Shark audience here, and then you can get right into it.
Hey guys, I hope you can hear me and that you can see the LizardTrader logo. Can you just give me a quick confirmation, Ty? That would be great.
Yep, audio is coming through loud and clear, and we are seeing the black LizardTrader screen.
All right, great, thanks. Yeah, it's great to be back. We missed the Shark Week this year. I was on vacation, so couldn't make that event, unfortunately, but glad to be back here today. We have some nice summer days in Berlin these days. Had some pretty high temperatures last week, pretty unusual for Northern Europe. I won't keep you for too long here today. Shorten to the point presentation, around 30 minutes, so we'll have time for questions afterwards. If you're not familiar with us, that's me to the left here, and our indicators are all courtesy of Harry, also known as Fat Tails, our eminent market lizard here. And he is quite well known throughout the NinjaTrader community, both in the NinjaTrader support forum, as well as over at futures.io. As for myself, I previously ran a company focused on sentiment analysis, applying concepts from behavioral finance and looking at how news sentiment and investor psychology contribute to market noise. And that's what we'll talk about here today, market noise. What we see from this guy is one approach for dealing with it, but truth be told, if you insist on seeing with perfect clarity before making a decision, you will probably never decide. So whenever we hear that there is too much noise to trade, or it's usually just a lack of understanding of what market noise really is. Every trade satisfies some condition in the market. So if it's rallying and then just as quickly retreats, it's overbought in the short term, and the retracement simply reflects the fact that the inventories had to be brought back into balance. So noise is what makes financial markets possible. If there wasn't market noise, there wouldn't be much trading at all. People will just sit on their hands like this guy here, holding onto their positions and doing nothing. So noise is what creates opportunity. Of course, it also creates risk. And be that as it may, markets are noisy most of the time. So if you're a day trader, it's a really good idea to have a strategy for dealing with this scenario. So today we'll start off by looking at a technique for assessing market noise. It's something that we're calling range projections. As the name implies, it's based on the average of recent market volatility and will give you a tool to effectively assess the type of setups to consider. One setup that works pretty well during noisy conditions is the London Breakout. It is based on the opening range, which many of you will be familiar with. It takes place following the open in the European Forex markets. We'll have a look at how to put this together using the Bloodhound and Blackbird tools from Shark Indicators. You also see a few ways to manage the trades once you're in a position. So where to set your initial stop, profit targets, and when to adjust for changing conditions. Towards the end, we'll also have an event promo, including a discount package that we put together for the Shark Indicators products, as well as some of the tools from our premium suite. All right, so first off, the range projections. We're looking at a 15-minute chart of the Euro futures contract, and the range projections display noise bands here. Those are based on, these are the noise bands, based on the volatility of the prior 10 days here. The daily noise is defined as the smaller of high minus open and the open minus low, averaged over the end days, so in this case, again, 10 days. And therefore, the upper band is calculated by adding the expected noise to the current open, whereas the lower band is found by subtracting it. As you see here, we're using the Globex open, which makes the most sense, seeing that this contract is traded around the clock. There are, however, certain opportunities that occur between sessions, and I'll get into that in a few minutes. For NinjaTrader 7, you can also choose to display the noise levels based on the regular trading session, which makes sense if you're looking at markets with certain local bias. So for example, index futures, some of the commodities or bonds will have a strong local bias. And that function will also become available for NinjaTrader 8 sometime later this year. Here we've added the weekly range projections. The concept is the same, but we're now averaging the volatility of the past few weeks. We have 4 weeks on here as a look back. Again, it's the smaller of high minus open and open minus low. And as you see here, what looked like a significant breakout from the daily perspective was still well within the weekly noise level. The average weekly noise level low band is located down here. With the daily range projections, you also have ways of calculating targets, the daily expansion bands, as well as the average daily range. But here in this presentation, we'll use the opening range to define the target, so I won't confuse you by going into too much detail about that. Just briefly, the daily expansion bands is the larger of high minus open and open minus low, average over the end days. And that will show you the average expansion beyond the daily noise, whereas the average daily range can be used to Also define the target. Adding it to the current low will be the high projection, or if you subtract it from the current high, you will have the low projection. But what does all of this mean? Well, the noise bands that we see here show you how far retail traders, or noise traders as it were, how far they're typically able to push prices. So a breakout from these levels will indicate participation from higher time frame investors. So therefore, if prices are trading at the edge of the noise bands, it will make sense to position yourself to cash in on a breakout if that occurs. Here we've added a opening range to our chart. We're looking at 5-minute bars of the 60 futures contract here. The range used for the London Breakout is defined as a 3-hour time period. So that starts at 5 o'clock in the morning here, Central European time, going to 8 o'clock in the morning. And that will then mark the high and the low points set during the final hours of the Asian session, leading into the European Open. So the idea here is to determine where the pre-session range plots compare to the noise band. So in this example, we see here the range plotted smack in the middle pretty much of the noise bands. And we'll then trade breakouts in either direction. Often we see breakouts in these scenarios with moves that will go on to test either the daily levels or the weekly levels. And just as a general note, when the market trades in this noise area, will be driven from price mark to price mark. So gaps, prior highs and lows, prior VWAP levels, they will all be of interest and possible targets for short-term traders in this area here. But as mentioned, breakouts from the noise bands also indicate participation from higher time frame traders. So if prices are trading at the edge of the noise, it makes sense to position yourself accordingly. So if we have a situation like this with a pre-session range partly to the upside of the upper noise band, we'll have a long bias and block any breakouts to the downside. And on the other hand, if we have a range to the downside of the noise bands, we'll have a short bias blocking any breakouts to the upside. And again, if the range is plotting within the noise bands, there is no bias. Both long and short positions are allowed. Of course, if the opening range is completely outside these bands, then we're no longer in a noise scenario, and we will not trade this setup here. To avoid getting caught in whipsaws, we're using the Ichimoku momentum indicator for confirmation. It is what creates the paint bars that plot here. If you're not familiar with the Ichimoku, we did a indicator spotlight on that recently, as well as a webinar presentation. So you can check that out on our YouTube channel if you're interested. For now, it's just showing us trend and the neutral states here. And as we see here, we had a brief move to the downside of the range here. But the Ichimoku composite trend here was neutral, so effectively blocking what turned out to be a failed breakout here. And once in a trade, we use Blackbird to set the stop loss. I've set it here to the midline. A more traditional approach would be to set it just below the low of the range, but I find that often that just puts on too much risk, and the targets are harder to justify from a risk-reward perspective. So I'm setting it here to the mid-range of the opening range for this 3-hour period that we talked about. As for profit targets, we also use the opening range for that. This is the first target, which is a multiple of 0.5. So that makes it equal to the risk for the first part of the position. So the distance from the stop here from the entry is the same to the first target, whereas the second and third profit targets are set at a multiple of 1 and 2. So the second target here is the same as the opening range itself in the direction of the position, whereas the third one is double the size of the opening range. But Blackbird can also be used to dynamically manage the trades, and we use this to trigger actions once we're moving into these imbalances that I talked about earlier, oversold, overbought. And what we see here is the volume weighted average price, the VWAP. This is something that institutional traders pay a lot of attention to because it's a price benchmark used to control execution costs, objectively measured with standard deviations from the volume weighted average price. So they try to position themselves as close as possible to the VWAP because their job security as well as their bonus payouts depend on it. So by knowing whether institutional traders are likely to participate in a move or take a step back, we can use this information to manage the trades. So in this example, we hit the first profit target, and I will look to protect any open profit as we've seen trades taking place at the outer standard deviation bands here. Once we're coming in on these areas, I will tighten the stop loss because rebalancing is likely. Statistically, less than 5% of the day's transactions take place in that area. So always a good place to lock in some profits. So after the first profit target was hit here, the stop loss is set to break even minus 2 ticks. The reason is that this area minus 2 ticks is often then support after a breakout like this. And in this case, we managed to stay in the trade. We also hit the second target here, but didn't quite make it to the third target up here. And in cases like that, we don't want to give too much of our profits back to the market. And we've therefore created a rule that kicks in if we've been at the outer standard deviation bands of the VWAP, combining that with a analysis of a short SMA. So basically, if the market has been trading here at the outer standard deviations and we see that the slope of the SMA is going against our position, we'll then move in the profit target and tighten the stop loss again. This is an example of a long trade earlier this week. We see a couple of things going on here. First, we have the opening range plotting inside the weekly noise bands. The upper average weekly noise is this green band up here. We also have a breakout that already took place at the completion of this 3-hour range. And then we got a signal here as the prices came back to this area again. The profit target, the first profit target was then hit, but as you see, the market then rolled over and went back into the range. And so once we've hit the first profit target and then see a slope going against the position, as mentioned, the stop loss is moved to the break-even entry minus 2 ticks. And that just mimics how I trade this discretionarily. So if I'm up a certain amount of ticks and the market starts to go against the position, I will move the stop loss to somewhere around break even. And as I said, from a technical analysis point of view, that also makes sense as this higher end of the range for a upside breakout will represent support. Of course, I do want to give the trades here some room to breathe, but if the first target has been hit, I'm going to manage that profit and make sure that I go home with something. Here is another example. We break to the downside of the range, and profit target 1 is hit here right away. And then we see the slope of the SMA moving up here against the position. Again, the stop loss is reset at the break-even plus 2 ticks in a short position, of course. This will then normally represent resistance. But here we just marched on straight to the second profit target. And at that point, I will want to manage the position more actively. So a trailing stop loss is set at the highest high of the last 2 bars when we see this this slope here going against the position. So I'm not leaving the stop here, which was the case for the first contract. Once I've hit the second profit target, I'm moving in more aggressively with the trailing stop loss when this slope is going against the position. Of course, later on, we saw the market continue for a little bit here, but statistically, this is what makes sense. One really neat feature with Blackbird is that you can set the trailing action to cancel once the close establishes itself below the SMA line again. So if we had the close below the SMA line here, the trailing stop will be canceled because you see the market is trading with the position again. So that's a really nice feature with Blackbird there. All right, one last example, and this time I've highlighted the exit condition that's triggered by prices that moved beyond the outer VWAP standard deviation. Although it's a pity that we didn't hit the second target here. Bloodhound detects overbought. We see prices outside the outer standard deviation bands here, and then the slope falling again against the position, and the trailing stop kicks in and is set to the lowest low of the past 2 bars minus 2 ticks, taking additional profit off the table here before the market returns into to the range. So success as a trader largely depends on understanding who and what your opponents are up to. As mentioned earlier, noisy scenarios will see the market driven from price mark to price mark. So gaps, prior highs and lows, prior VWAP levels, minor fib extensions, daily expansion bands, and average daily range. They'll all be of interest for short-term traders. For now, we've just added the opening range expansion levels as profit targets to this template. But it's of course something that can be expanded for other markets and timeframes with additional price benchmarks as well. But for this presentation here, just keep it simple so that we understand what we're working with here. And yeah, the really great thing about Bloodhound and Blackbird is that you can really define pretty much any entry or exit condition or trade management rule you can think of. What I've shown you so far is certainly not rocket science, but it gives you a good idea of what's possible with these NinjaTrader add-ons. The main benefit is being able to specify trading rules in a objective form to determine whether your trading idea or trading approach is statistically viable. It's certainly the fastest and most time efficient way to do so that I've come across. It's also fairly easy to work with. You don't have to be a programmer to put together a system like this. Of course, there is a learning curve involved with all of this, no question about that. But if you put the work in, there's a lot of possibilities and good tutorial videos up there as well to help you get going. But let's just do a quick recap of how the Bloodhound template here is put together, and then we'll have a look at the stats. It's a pretty simple Bloodhound template, actually. As you've seen, there's a limited amount of components here. Most of the heavy lifting is done by Blackbird. We're looking at where the pre-European Forex session is plotting relative to the daily and weekly noise bands. So if the range is within the daily or weekly noise levels, there is no bias. If it's at the upper daily, weekly noise level, there is a long bias. And if the range is at the lower daily or weekly noise level, it's short setups. Also, remember we're using the Ichimoku composite trend to confirm the setups here. As for trade management, the initial stop loss is set at the mid-range. And we then have the first profit target at 0.5 multiple of the range. The second profit target equal the size of the range, and the third at a multiple 2 of the range. Finally, the dynamic trade management come into play when we've hit the first and second profit targets, and the market is traded at the outer standard deviation bands of the VWAP, and we see that it's going against our position. So this test here was run on the EU session, focusing on smaller moves in noisy markets. Some pretty interesting stats. Over the last 12 months, 49% profitable, profit factor of 1.55, pretty even long short distribution for a total of 330 trades. Average time in the market a bit less than an hour with a total net profit just shy of 7,800, commission included, with a drawdown of 1,860. So there's an average of 3 to 4 trades a week here. There is no dynamic scaling of the 3 lots. I just left this at 3 contracts with no upscaling allowed, as that's what I'm comfortable with trading. All right, so with our tools, there are not many surprises. You can sign up for a free trial as well as those of Shark Indicators anytime. That way you can try it out and find out if it's something for you before you make a purchasing decision. What we've talked about here today are pretty well-established concepts, well known to institutional and professional traders alike. Everyone knows what the opening range is, and the same goes for the Ichimoku and the VWAP. All of our templates are open as well, so you can play around with them and customize according to your own trading times and the instruments that you're interested in. So there is no secret black box here where you're not sure what's hiding under the hood. Also, should mention that traders in the NinjaTrader community have voted Harry's tools the industry standard. Half of the top downloads of all time over at futures.io are Harry's, so that speaks for itself as to the status these tools have in the trading community. So if it's all right with everyone, I'll now transition into the webinar promotion that I prepared for you today. There is something for both new and existing Shark customers to take advantage of. The offer includes everything we've talked about, together with a couple of bonus specials. There's a lot included in the VWAP package here that I haven't talked about. We have weekly, monthly, as well as quarterly VWAP calculations. And if you're trading instruments or Forex pairs or cryptocurrencies that do not have reliable volume information, you can use something called the range weighted average price for approximating the volume information. So that's the range weighted average price. And as for the Ichimoku, has various trend filters, the composite trend, as well as trade signals. And again, there's a recent indicator spotlight and webinar for more info on that as well. I didn't want to confuse you guys with the Ichimoku today. It's pretty wild visually, so if you're not familiar with it, it's easy to get off track and distracted from the main topic today, which was market noise. As part of the promotion here today, we'll also throw in a membership to our indicator library. This is a pretty valuable resource to fine-tune your trading. We have over 100 indicators in there now, and we'll be adding a few new tools next week. You can think of the library as a toolbox with a lot of different tools and categories in it: trailing stops, trend analysis, statistical indicators, volatility, you name it. It's all in there. And with that, you also get our indicator spotlight, where we feature one of the library tools about once a month. So everything that we've talked about, as I said, regarding Bloodhound and Blackbird, the VWAP package, the opening range and the Ichimoku is included in this promotional offer. We also include the strategy templates and a consulting session to get everything set up on your end. So that includes taking care of the install process, workspaces, everything you need to know to get going. And normal list price for this is just shy of $3,200, and with a total price of $26.95 today, you get a good discount on this, about $500 off. And then if you already own Blackbird and Bloodhound, we have a special offer featuring our indicator package here together with the templates that we've talked about. This also includes a consulting session helping you hit the ground running with our tools as well. Normal price for this bundle is $1,100, and with today's special rate, you get it for $795. We'll have it up until the end of the week, so make sure to take advantage of it before we take it down. And of course, if you're a happy customer and have both our products as well as those of Shark Indicators, we'll be happy to share the templates with you. Just get in touch with me and I'll make some room in my calendar for a consulting session. All right, so this is where you go to register for the promotion, LizardTrader.com/shark webinar. As I said, we'll have the promotion up until the end of the week. So head on over to LizardTrader.com/shark webinar and check out some more information on it. All right, so that's pretty much what I had for today. And I'm going to hand it back over to Ty, and we'll open up the Q&A session.
Awesome. Thanks, Kris. Oh, yeah, we got a few questions in here. Darren is asking if your concept works equally well on crude. Have you tested it on that?
This particular concept I have not tested on crude, but we have a couple of other strategies that are customized for CL. So if you swing by our YouTube channel, you'll find more information on that. I've found that crude works quite well with session pivots as well, and yeah, there's a couple of presentations on that, specifically using the regular session high and low to create the pivot levels. And then we also have the auction bars that can help locate reversal patterns off of those levels. So that's a pretty good approach for that. But that's a little bit off topic for market noise and what I've prepared for today. But it's something that is definitely on my list to see if the noise levels respond well as well to the crude markets. I've held off on that so far because the range projections that we just came out with for an entry rate are so far for the ETH session. We will have a version that addresses the regular session coming up, and I think at that point that will be good to revisit the topic of noise for commodities and other markets that have a local bias. If you use the ETH or the Globex Open for those markets, of course, you can create noise levels of it, but I think it's probably more accurate if you use the regular open for that.
All right, well said. Vadim is asking about your progress with Bloodhound and Blackbird templates for NinjaTrader 8, when you would have them available.
Yeah, I actually started out with templates for NinjaTrader 8, and then Ty, you probably know there was a issue with one of the builds. So my plan for the presentation today was actually to build this for NinjaTrader 8, and then there was an issue with I'm not sure if it was just our indicators or a more general issue, but the build was put back a little bit, and so this is something that I'll start working on now towards the end of the summer, updating the various templates for NinjaTrader 8, the Shark indicators versions for that. So that's near the top of on my list. There's a couple of indicators that are going into the library in the next couple of weeks, but it's coming for sure.
Awesome. Very cool. And for those of you on the Bloodhound and Blackbird NT8 betas right now, we're gonna have a pretty big announcement at the end of this month. So just keep your eyes and ears open. And thanks for hanging in there. Kris, someone is asking if they want to get a hold of you. What email do you prefer?
You can get in touch with me via the contact form over at LizardTrader.com. Otherwise, at info@LizardTrader.com is also a good place to reach me. And yeah, just drop me a line and I'll get back to you.
All right, awesome. Scrolling through here, see if we have any more questions. Oh, just got a couple people praising the lizard indicators, saying make the leap if you haven't already.
Great, thanks. Appreciate that. Yeah, it's a bit confusing that we have two websites actually. We have LizardTrader.com, which is what we started out with, and then we wanted to make a clean break for NinjaTrader 8 and have one place with only NinjaTrader 8 stuff. So that is Lizard Indicators, and that's where you will find the library as well, along with all of the premium indicators. Those are, of course, available for both NinjaTrader 8 and NinjaTrader 7. And moving forward, we have some plans for LizardTrader as well. That will be yeah, probably towards the end of the year that we make an announcement of what we'll offer via LizardTrader. And Lizard Indicators, of course, is the indicator tools. So stay tuned for that as well.
All right, we've got a few more rolling in here. Gary says, thanks for making the time for this presentation. It must be getting pretty late over there.
Yeah, pretty late, and it's a bit of a challenge to stay sharp at the end of the day. But yeah, I plan my week when I have these Shark indicator presentations that I have plenty of sleep moving into them. Usually, if my kids don't throw a wrench in my planning, but yeah, we're coming up on midnight here in 45 minutes. But I'll be here answering your questions, so keep them coming.
Awesome. And we really appreciate that, Kris. I know the traders do as well. Darren is asking, have you tested this on any other currencies or just 6E?
No, I've looked at this for British pound as well. Doesn't work quite as well, but again, this is a pretty brute concept as of right now. But I've been looking at this pre-session range for the for the forex markets for a while. It's something that works well for my life situation right now, and looking like a pretty interesting setup for not only 6E. The Swiss franc is a little bit thin, and I'm not sure there's not enough trading in it, I think, to justify it. But I think focus should be on European currencies in this window. Just coming out of the Asian session, as I mentioned, and then the European traders are looking to make the move once it opens, 8-9 o'clock our time.
All right. Paul is asking if the Ichimoku tool and the noise bands are meant to add to the original VWAP and pivots, or are they an alternative strategy?
The Ichimoku is just a trend momentum filter that works well on also longer time frame periods. It's a basically 5 time frame momentum indicator, so reliable. And the noise bands is just a concept that really complements the opening range. So different markets, like different people have different personalities. So been looking at mainly this pre-session range for quite some time, and trying to figure out how to manage it, and how to validate the entries. And noise bands look to be pretty reliable. As mentioned again, the ETH or the Globex Open, and then managing the profit targets and stop loss by just deviations or expansions of the opening range.
Awesome. Trev just asked, when can we expect to get a link to the recording of this webinar? Guys, I will send that out either tonight or tomorrow morning at the latest. We've got a couple more positive reviews here. Han says he owns all the premium indicators, and Kris provides generous support. So thanks for the feedback, Han.
Thanks, Han. Appreciate it.
John says, thank you, Kris, for the programming and adding volatility stops and the ATR stops. Thank you for the feedback, John. All right, guys, that seems to be about it. For any other questions for Kris, again, just send those to info@lizardtrader.com. Any emails specifically for us at Shark Indicators, as always, just send those to support@sharkindicators.com. So again, thank you, Kris, for doing this. We'll let you crash here pretty soon. I feel like you got to be getting pretty tired.
All right, thanks a lot. It's always a pleasure to do the events. Thanks a lot for checking in, guys. I hope it's been of value to you, and yeah, I look forward to speaking with you sometime soon. Take care, and bye-bye from Berlin.
Awesome. Thank you again, Kris, and thank you, traders. You guys have a great night and a great weekend.